Hi there, this is Alvin from Dr. Wealth. I was very surprised when I look at Keppel DC's REIT share price and it has dropped more than 10% in a span of 2 days. It is supposed to be one of high quality REITs listed in Singapore, and yet the share price has dropped more than 10%. Is probably very surprising to other investors as well. So in this video, let's figure out what is going on with Keppel DC REIT. The very first thing that we need to know is that they just reported their third quarter results, and this is a summary, right? Let me blow it up for you, and you can see that the very first thing is the distribution per unit has declined, which is the dividends have declined. For such a high quality REIT, investors will expect the distribution per unit to go up over time, but yet the DPU has dropped about 3.6% in third quarter 2023 as compared to a year ago. So that is the first sign that investors do not like to see. And the next thing is that we want to figure out what is wrong. For the DPU to go down, is it because they earn less money? That is not the case, because their gross revenue has gone up by 0.5% compared to a year ago. So the impact came actually from finance costs, which I boxed up for you in red. And you can see that the finance costs have gone up 57% from a year ago. And that's likely due to the interest rate hike that we have seen. And investors already know that interest rates have a very big impact to REITs because they leverage to buy properties. And now you can see that the interest rate impact has crept into even good quality REITs like Keppel DC, and you can see that the distribution per unit has started to decline due to the increase in finance costs. If we look at the history of Keppel DC REIT, it has been consistently delivering higher dividends on a year-on-year basis consecutively for many years. And it is very likely that in FY23, this track record is going to be broken, right? There might be a lower dividend compared to last year, the entire FY, but it wouldn't be a very significant drop, because if you take a look at the first 9 months, the DPU only dropped about 1%. So it might be slightly lower than FY22, but indeed the streak is likely to be broken and we might see a lower DPU this year. So that's the first impact. And then the next impact is that let's figure out whether the increase in financing costs would further impact the DPU. The answer is unlikely, because if you take a look at the debt maturity, which means that the REIT need to renew their borrowings in 2024, 2025, is just a very small percentage of their overall loans. Okay, so it is very likely that the interest rate impact is stabilizing for at least Keppel DC REIT. But that said, because investors also expect that interest rate cuts will happen in next year, that would also mean that the Keppel DC REIT may not enjoy as much of these rate cuts, unless a majority of their loans are based on the variable rates. Okay, if they are majority fixed, which is the case, then the benefits of a rate cut may not be enjoyed by Keppel DC REIT. Okay, so this is the situation, but that is not the core issue why the share price dropped. Okay, it might have some impact because of the DPU drop and because of the higher financing charges, but to me, I think the biggest issue is related to this company called Neo Telemedia. So why is this important, and how does this relate to Keppel DC REIT? Is because this Neo Telemedia is a master lessee of the 3 Guangdong data centers belonging to KDC. Okay, and it was DBS Research that published an analyst report that say that this Neo Telemedia may be of a risk in terms of facing a bankruptcy possibility, and that means that they may not have enough money to pay back Keppel DC REIT for the lease that they have committed for these 3 data centers. And you can see the share price of this Neo Telemedia is really a penny stock now. It has dropped 98% since its IPO in more than 10 years ago. Okay, so this is again not a very good news. All right, so this is an excerpt from DBS Research. They say that Neo Telemedia income represents about 10 to 11% of Keppel DC REIT's earnings, and it also have a potential impact of a maximum 16% to the DPU. So if this Neo Telemedia go bankrupt and cannot pay a single cent to Keppel DC REIT, this is going to be a double-digit percentage impact to Keppel DC's revenue as well as dividends. Okay, so it is indeed significant. And if you recall, that was exactly what happened to another data center REIT, DG Core REIT, that is also listed in Singapore. And they have this, one of the major tenants, Sistera, filed for bankruptcy protection, and it was representing about 22.4% of the rental income. And you can see the share price of DG Core has dropped about 63% okay, at the time where this announcement was made or made known to the public. So that is something that we fear for Keppel DC REIT as well, right? If indeed this new telemedia goes bankrupt, we might see Keppel DC REIT share price slide even further. And now let's look at how susceptible this new telemedia is to bankruptcy. Okay, we look at their current ratio, right? The current asset, it has about Hong Kong dollars 728 million, and liabilities is about 2 billion in terms of Hong Kong dollars, and that means that the current ratio is less than 1. And for these current liabilities, it means that the company needs to repay this within a year. So in a short-term sense, it might run into some cash flow issue if it cannot repay some of these things. And some of the liabilities might also be the lease that has been committed to Keppel DC. So it definitely doesn't look good for this new telemedia, and it's highly geared debt to equity about 320%, which also means that and a higher interest rate may push them to further cash flow issues. Okay, so although they are still paying the rent, but it doesn't look as they are in a good shape. And this is what DBS research will say. At this juncture, there's no indication that the leases will be affected, right? It is premature to take any immediate action given that the tenant has consistently met all their rental obligation and has not signaled any issues. Okay, so it is more like DBS research is giving a forewarning that this may happen. But I do think that because with this attention brought to light, a lot of the investors started to feel uneasy, and they worry that it could be a repeat of the DigiCore issues, and they started to sell it out. And that's why we saw more than 10% drop in Keppel DC REIT share price in otherwise quite a stable REIT in my opinion. But let's take another look at their valuation, right? And this is from OCBC research. Okay, we can see that now it is trading close to its -1 standard deviation in terms of its price to book. So generally speaking, we can use this kind of charts to help us inform whether a REIT is overvalued or undervalued, especially for REITs where a majority of their value comes from their properties, right? So the price to book ratio becomes relevant here. And for this Keppel DC REIT, for Keppel DC REIT, it shows that the share price is actually undervalued at this point in time, okay, if the price is trading around -1 SD, in my opinion. And likewise, for the dividend yield is also close to the +1 standard deviation, because for you want it to be +1 rather than -1, right? And the yield is closer to about 5.5%. Okay, and for high quality REIT, I do think that this is indeed reasonable rate, right? Of course, people will compare, oh, the treasury bill, the bond rates are high now. You can get 3+, 4+%, depending on which tenure you buy and which geography you buy. But in my view, I do think that this is still quite a solid REIT to talk about. But personally, I still do think that this REIT is definitely one of high quality ones, and it does have some short-term challenges, right? Like what we've seen, interest rate issues, but it might go away next year. And second, with the new telemedia, it is not known yet, right? But even in the worst case scenario, I do think that they can recover from it by finding new tenants for the 3 Guangdong data center. It's not like it's just destroyed and disappear from its portfolio, right? The buildings are still there, and they can find new tenants and generate new income, but they might just be a gap which is temporary in nature. So I don't think that this Keppel DC is facing a permanent problem. I do think that a lot of these challenges are temporary in nature, which presents an opportunity for investors to look at it, especially if your investment horizon is more long-term. Some of these short-term challenges may create a more favorable share price for you to look at. So even on the context of a DigiCore REIT, we have seen that after the impact wasn't as big as what people feared, the share price have actually rebounded from the lows. Okay, so I do think that even if New Telemedia does go bankrupt and have a short-term impact to Keppel DC REIT, it is not something that they cannot recover from. So generally, my opinion is that Keppel DC REIT, I'm short-term bearish, but I'm long-term bullish. Let me know if you agree with this assessment in the comments below. Hope you like this video. Give me a thumbs up, and I'll see you in the next one. Remember to subscribe to the channel as well. Okay, goodbye and thank you.